Okay, so in this video, this is going to be about technical analysis. Technical analysis, I mean, to be honest with you, you can go down a rabbit hole with this. You can go Google technical analysis of trading, But I mean, really, the fundamentals of technical analysis is looking for patterns and candlesticks. Candlesticks is basically a form of reading the past price action of a certain time frame, right? So a candle tells you the sentiment of what is going on. Are we an uptrend, downtrend? Is there buying, selling? It's like what is the mood, of the market, and it all depends on your time frame. There are 1 minute candles, 3 minute candles, 5 minute candles, 15, 30, hour, day, weeks. It depends on what you're trading. Like if you are an investor, you're trading daily, weekly, monthly candles. If you are a day trader, you're trading anywhere from a 1 minute, 5 minute candle all the way to a 30 minute, 4 hour candle or hour candle. I've tried everything, and in my system that I use, I prefer the 5 minute candle with the 30 minute candle overlay on my intraday chart right here. And then my multi-day chart, which is the week, I like the 30 minute candles with the 4 hour overlay. Reason why is because it gives me a sentiment of what is going on. Now, if you do intraday, 1 minute can be great because you can see patterns within a pattern, but patterns will show up everywhere, right? And you can see what's happening in a 5 minute candle. You can see what's happening in a 30 minute candle based upon candles. So the main thing because all I'm trying to teach you in these little videos on technical analysis and levels is basically leading up to making a plan, right? That's all we're trying to do. Making a plan is ultimately where we're defining our risk and reward. How much are we willing to risk in order to have some kind of profit, right? And then you rinse and repeat. And guess what? The market is like a snow globe. So the moment you can just accept that it's going to do what it wants to do, and then if you give it some time, 30 minutes, hour, 4 hours, a few days, shake it up, it's going to do something else. So one day you might get frustrated that it's a chopped day and you're mentally exhausted. Give it 2 days, you might have a 300-point move, right? And you need to understand the dynamics in order to, that what's presenting itself, the market, to know what will happen. So TA will help you with that. And let's go into patterns. My favorite patterns are the trends. It's the breakouts. It's the breakouts of the trends. So this right here, you can see that. Actually, this is a great example. So on this week, let's turn back the time. So why it's important to have an idea of technical analysis. And technical analysis, in this case, this is what's considered a lower high because it's going higher, but it's also lower, and then another lower high. So right here, you can see you want to have at least about 2 points of interest. 2 points doesn't mean it's guaranteed you know what's going to happen, right? More points you have of tagging as an area, you're going to have a more defined trend. So here you have the close of this candle right here, and then you have the reversal of this candle. So this right here told me, now granted, this is a weekly chart, right? So this is Monday, this was Tuesday. So when they gapped it down here, this tells me that this right here was a point of interest. So delete this. So on Tuesday, it's really hard to know, okay, what are they going to do? So right here, they could have came up or they could have came down. But when the market opened, they were down here. That means they rejected this hard. So what I want to do is I want to draw a line. It's always good to at least have some kind of TA. Reason why is you will see, if you didn't already see, why it's important, because it tells you what the market wants to do. The market wants to move where there's liquidity, right? where there's orders to be scooped up. So here what's happening is you have your lower high. So once you got down to support, and this was a support because this is a mid-range ATR. So they could not close the candle. See, they weren't closing it. So that tells me that they potentially could reverse this. And again, these are 30-minute candles. This is the morning session. This is the afternoon session. So what they might end up doing, so closing, that is a technical analysis, as in you start getting what's called a hammer or shooting star. It could be an inverse hammer or a hammer where you see how there's a hammer or what constitutes a hammer? You have a piece of metal that's on top of a stick. Well, here's your stick, here's the piece of metal. So that right there tells you that that's a potential reversal candle. These are reversals. And when it happens near a level, support or resistance, that is an indication that there could be reversals. Well, where would be your target? Your target would be where there's resistance. Resistance happens either at levels or where there's trends. So if you know there's a clear defined trend, where is it going to go into that trend? So that tells me that this potentially can go all the way back up to this line. And what ends up happening at the end of the day? It did exactly that. So if you would have been in this trade the last 30 minutes of the day, this candle right here would have netted you 150 points. So 2 contracts would have been 300 points. 300 points times $20 is $6,000. That all happened in 30 minutes. But this was very, very predictable. Very predictable. The market is very predictable, even though it's unpredictable, by learning these technical analysis. And so here you go, boom, that was it. So that's where you have your trend. So they call them wedges. So you have your downtrend wedge. So then when you break out, like in this case, like this broke out. This isn't just break out. This broke out. So this is not really a good example of what usually happens with the breakout. The week before was a perfect example of a breakout. So again, let's delete this. So this right here, let's go back. So here you see this was Monday. All this is Monday. Let's see if I have a better way of. Yeah, here you go. I'm gonna draw vertical lines so you can see Monday, Tuesday, so this is Monday, Tuesday, Wednesday, Thursday, Friday, and so on. So breaking that down, and I'm showing you this on a bigger time frame, and I'll show you again on the smaller time frame how you can use TA. So what's the TA? So what do I see? This is by now they were on Thursday, right? And I'm seeing that they are just following something. You see how they're scooping these up? See this? Here's a hammer on this day. This was at 1 o'clock. Scooped it up. What did they do the rest of the day? Brought it up. They closed the day higher, And so what you want to do is you want to start drawing yourself a line. Perfection on the line. So this is how it works. When you have what's great is when you can identify a trend, then okay, anytime you scoop into the trend, that's your trend. You want to buy the dips. The moment it breaks, it usually gets violent, right? And this was 1 30-minute candle. So this is we'll get into when this section of the making a plan video, but this is what I would be doing on a plan. So here you have a failed breakout. Then the next day we opened up above, which we should have kept on going, right? This was the trend. The moment it broke below the support, the previous days or afternoon support, it was going to go down. So there was plenty of time in this candle to get in. So even though this looks like this was pretty violent, in reality you had about 5 or 10 minutes to react to this. But making a plan, you should have been like, hey, if we don't go up, we have to come down. If we come down, where do we go? Well, how TA works is wherever you start that trend is usually where they're going to find liquidity. So where do they find liquidity? They found it right in this area. Sure enough, they dropped it all the way down here. And then look, they scooped it up the next 30 minutes, and that was at 9 o'clock. The 9 o'clock. They held this line, came back down, and that was support for the morning, right? Morning. So normally what ends up happening, after you have a breakout, you typically have a retest at some point of that breakout. Doesn't matter the time period. Usually you'll have a breakout, a retest. So like so if this would have broke out right here, typically you would have some kind of retest, fill the gap, it would come back down here, and then they probably, the next candle, which would be a 30-minute candle, that would have been like at 9 or 9:30, they then would reverse this. So you have usually this play where it clearly showed that it broke out, and then they would come, retest this area, and then they would reverse. And typically where your target is where they failed that that move, which would have been, your target would have been wherever this is at. So I say that it's actually right up here. This is where you would want to be targeting. So this is sort of a small, ideally you would want this to come down here, consolidate one more day, and then break out. This breakout would then get you all the way up here. This is sort of a small breakout, but that is the reason why they did this. But anyways, so you can see if you were playing this and you missed all this, if you weren't aware of this rule of a retest of a breakout, you would have been lost all day. You would have been thinking you're going lower, but then they actually reverse it. And then if you think they're going higher, then they're going to reverse it. This is what money makers do. They play with your mind. So look what we did. We retested this breakout. And you also then had this pivot as a resistance. So from there, if you would have shorted it, you would have had that same exact move the afternoon, the last hour and a half of the day, and then it ended up coming all the way back down and closed right here. So that's usually what happens too after you it ends up coming down. It comes back down to the lows. A lot of times it doesn't necessarily break back down. If it was going to make newer lows, it would have done it already, and it would have never came back above VWAP. It would have came up here and then reversed and then came back probably down here. But the fact that we came above VWAP tells me that the trend is not actually strong today. This was a lot of points, but it really wasn't a trend day, because you can see that this was the zone that we played in. We just played in that zone. The zone I mean by, this was your high and this was your low for the day. It was already set. And you see how the rest of the day, it was playing within the high and within the low of that day. So understand that that's how that works. The market moves like that. So that's technical analysis when it comes to finding trends and so on. Another technical move that you'll see a lot, I guess you can call it, is they call it a halfback. You know, a lot of times a move, it retraces half of the move. So you see how this move right here was here to here. This was 200 points from the top to the bottom. And then it actually retraced close to 100 points and then came back down 100 points. So a lot of times what will end up happening is you drop, find support, half of the move, and then they finish the day back at the lows. So you see what that did? That was on Friday. So, and that's the reason why, and we'll go into the next lesson when it comes to levels. That's the why I like using intraday levels to give me more precise entries for those halfback moves, because you can see right here, here's your precise move, as you could have entered right in at the previous day close and then captured that entire move down. But look how long it took. It took all afternoon to make that move. And I say it's 100. I guess, yeah, if you made the entire move, that was a 100 move. But in reality, you actually would only be making a 60-point move, because as per how I play levels is I'm not trying to catch the top and bottom. It's actually physically impossible to catch the top and the bottom, because anything could happen. So, but you're gonna find your better risk rewards near these levels and just play. Because if you didn't take profit here and you waited for the bottom right here, look, you would have missed and you would have given up a lot. And then this candle didn't happen until like the last 5 minutes of the day. So you don't want to be sitting here staring at a screen. I just want to take the majority of the move. And look, the majority of the move, even happened like right here. This was 60 points, and this was the low right here. So anyways, that was Friday's play. Going back to TA. So here's your TA again. So even on an intraday, you can see that, okay, look, we are, here was a trend. We broke it. It's a new TPO. It's the afternoon. And so when I say new TPO, and like you need to play in segments, like your mornings, your afternoons. And if you do that, you want to compartmentalize when you're playing. So anything that happens in the morning is the morning. Anything that happens in the afternoon is the afternoon. So you can't be too biased. You got to play within your zone. So if you were biased on levels, like at 12 o'clock right here, where are we at? We're below level. Yes, we came back above, but this shows that we're weak, right? So that's another technical analysis, as in looking at these candles. Are we weak? Are we strong? We were strong on a scoop. So you see that here's the hammer. So it's the same thing right here to the left. This candle right here. See how it was major support on a level, and it was a scoop. So they held that. So that tells me that they're buying it up. So, and again, that tells me that they probably have decided that they have found their low for the day. So that's how it allows you to make a plan later on if you miss the morning action. So, sorry. That we'll get back into that when it comes to making a plan. So I don't want to complicate where this is technical analysis. So let's go back to what else is technical analysis. So you have looking for trends, lower highs, higher lows, right? And then if you break out, what do you do for a breakout? Candlestick, you're looking for reversal candles near levels. So those are your price action, your support and resistance. Support and resistance, you got to look at your time frames. So when I say time frames, what is this right here? That area is the high of the year and all-time high. You see, there's nothing there. So, but last week we rejected it. So what do? It's now considered a resistance. So you put a line there. So now you're getting there, and look what it ended up doing. It pushed above. So a lot of times, what money market, this is what you have to understand. Money makers are there to take out your stops. Like literally, they know what to do. They know that people chase breakouts. There's people out there that do breakout plays, right? They know people like to chase, and so what they'll do is they'll go in and they'll scoop and they'll hit all these people's stops, and then they sell, because that's where the liquidity is, and then they sell. So that's why it's super important to just let things play out and understand that you're not going to be right all the time, but you want to be astute of where you're at. So you're at all-time highs. Is that the best place to go long? No, I want to know where the easy place is. So that's going to be your resistance. So what do? You sell into resistance. Where I will be happy is if they break above this with volume, and it'll be either next week or not, and then they hold that. If they do, then that is now going to be support. So keep that in mind. That's what technical analysis is: support and resistance. This is the same thing. Like, look right here. So let's look at last week's. Last week we had all this going on, right? Let's see if I do the replay on the 4-minute or 4-hour candles. Okay. So what was the week before? The week before you had you had multiple times where they're hitting right over here, right? These are these candles closing. So that's going to be really important the next week, right? So look at this TA right here. They they did a lower high. This was a fake. See, this was a fake. That's why it came down quick. It was a fake breakout reversal. They were coming out of this lower high, and they faked it, so that's why they ripped it down. And then they consolidated it. They held it. They weren't going lower. So if it can't go lower, where is it going to go? Higher. So then they broke it out. Well, why did they not retest this? A lot of times they will retest this because we broke above a level. If we were underneath here and they came back down, then yes, that could be a retest and then they break out of here. But because we held this, then you should be long biased, and it never came back down. Came up, consolidated, and they just slowly worked their way up. So this is a flag. See how a flag is basically when you have a lower high, higher low, right? Those are amazing. Why? Because you know that in 5 minutes, 30 minutes, 4 hours, 2 days, something's gonna happen, right? There's gonna be movement. So you should be excited for that, because if you know that there's movement, then you can capture that movement. So you know that if it's going to move and break out of here, then it's going to break out. So another thing with technical analysis is called measured moves. So I showed you the half back candles, where a lot of times it wants to go half back of a move. Another one is called a measured move. So where you are at your peak and your low, see, it's about 540. As you come down and you consolidate, a lot of times you'll make that exact same move from your breakout. So if you notice right here, see right here where the low is? See where the high is. It ended up making the exact same 550 point move before it then decided to reverse. And then it came back down and retraced that entire move before going back up. So those are really, so anytime I see a consolidation play like this right here, this entire move, which is right here, I immediately go and I measure the low from this, they call it a flagpole, this flagpole. Because then you probably will have that same exact move at some point, right? Now, what sucks as a day trader is you don't know when that is, right? Well, that's why it's great for a swing trader, but you know, swing traders, you could get wrecked. You know, you can go long and then they can come back down. But as a day trader, you want to know the direction of the movement. If you did, you would know that, okay, I need to be looking long. And it's not gonna happen when you want to, right? But you need to be long biased. But then once you start maxing out the move, then that's when it gives you the idea of when you need to start thinking of a different direction. So this happens all the time. You have those moves, and see, look right here, you had another consolidation, breakout. The move really was right here. 420 points, give or take. This is about, it was a little bit less than that, but this was not that move wasn't as easy. Really, what you need to be looking at is, again, playing level. You don't need to be really thinking that. I wanted to show you that, but that's not the most important thing, right? The most important things are recognizing the patterns and believing in the levels. Like, you didn't have to measure to know the measured move, right? You could have saw that, look, it's holding right here. And then where does it have to go? It's got to go somewhere. And look, by the end of the week, it hit exactly there. So that's TA. TA is measured moves, it's patterns, it's candles, it's all that. So that is the lesson. If you want more information, go Google it or send me a message. But that'll help you understand how to recognize. And look, be honest with you, you could be sitting on. So you could be sitting on your hands for a couple days before a good move happens. And it's better to do that and protect your capital than it is to mess up. But right here, like, as soon as you identify a trend, those are great, because you know that once you go far away from the trend, they're going to want to pull back into the trend. Go far away from the trend, pull back into the trend. Or they're going to pull back or consolidate into the trend. So that's what that ended up happening there. So that is that's technical analysis.